Today is Thursday, April the 9th, and it's the last day of the trading week. There's no trading tomorrow because of observance of religious holiday. Advancers led to decliners by about 4-1. Volume was a little bit higher than yesterday. You're going to see that in the volume charts in a second. And the Dow just up, down, but ended up 1.2% above. S&P 1.45, NASDAQ under 1%. What's interesting is that we now have the oscillator way overbought, and what McClellan tells you down here is important reading, so you should take a look at that. The Fed is now in charge of everything, and the Fed is buying. Of course, they're not buying stocks, but they're buying debt. So the banks, as a result of that, shot up today. We can go right to the banks. And where's the banks? Here we go. And you can see that the banks all had a big pop. Bank of America, Goldman Sachs, was up for 4 days in a row. JP Morgan, huge pop, up almost 10%. Citigroup, 8%, U.S. Bank Corp, 6.7%, and the XLF overall, 5.9%. So the banks we talked about earlier in the week are the signal that, gee, everything must be okay because the banks, even with low interest rates, are doing fine. And why is that? Because all of the small business loans that they're giving, the government's going to buy back 95% of those loans. The Fed is going to buy them back. The bank is only stuck with 5% of the loans, so there's virtually no risk. The interest rates are 0.1% plus 400 basis points, so 0.14, 0.15%. That's incredible. But these loans have to be paid back by companies in 4 years unless they use all of it to pay for rent, building, or paying employees. So if they use the small business grants for that, then that's a win-win for the employees who are getting paid and the companies, and they don't have to pay the loan back. The government is footing the whole bill. That doesn't make me feel very comfortable for the long term. But anyhow, here's our volume chart. You can see we had high volume, the highest buying volume of the week, but still not as high as the buying volume that we saw at the beginning of last week. I've got another chart to show you, which is a stack. This volume chart now has the Dow Jones. So when the Dow Jones was at its highest, we had very little trading volume. When it started to move down, you can see the down volume increasing. The down volume was everywhere. And then we hit this low point here, March the 23rd, roughly. And now you're seeing more big green up volume days. Last week was not one of those weeks for up volume. It was sort of the people just sitting back and waiting to see which way it was going to go. And as a result, we did see a bit of a pullback. But now it's moving up, and there's no reason to think it won't keep moving up as long as the Fed is going to underpin the economy. Let us look at the summation index, which took a big jump today up to 1249. And if we look at our McClellan oscillator, which is just off the charts right now, but it's back to areas that we saw in the big rebound after the market moved up in January 2019. So these are the numbers that we saw on a strong move up in the market. The same thing we're seeing here, a strong move up in the market and big numbers. So even if we have a bit of a pullback, we can spend a lot of time above this overbought line, and the market will still continue its recovery. And what a recovery it was, the best week in the stock market since 1974. But that's because 3 weeks ago we had the worst week in the stock market since ever. So they all balance out. Let's look at the S&P. First of all, the VIX was only down 1.68. So that's not telling you that there's a lot more comfort. There's some easing back on buying of puts. The S&P up 1.45% is continuing the move in the direction of 3149, which would be our first bat pattern. You see why they call it a bat pattern, just by its shape with the two wings up here. And a completed bat pattern would look something like that up there. So that really is, it's a bat. Apple up 1.14%, but rejection at the 50%. Let's see where we are now in the S&P. We're also at 50%. So isn't that interesting? We're now, sorry, that's Apple. Let's go back to SPX. We are just stopped at the 50%. So we moved above the 50% and we pulled back. So we talked about that tightrope walker walking between the Twin Towers. He gets to halfway. His staff is back on the other side where he left them. Does he go back where he's got support, or does he keep going where there may not be anybody waiting for him on the other side? That is what we're going to see. Amazon only up 0.02% today. That was disappointing. Caterpillar was down on the news that they are looking to borrow billions of dollars from a consortium of banks. So the first thing I thought of was, well, there goes the dividend. They're not going to pay a dividend if they're cutting corporate salaries and they're looking for a loan. They're not entitled to the small business loan because they have more than 10,000 employees. So they have to go and find money on the open market. And that caused them to go down. But guess what? They did reaffirm today that they are going to pay their dividend. So Caterpillar announced its dividend of $1.03. You can buy stock until April the 16th. On the 17th of April, that's next Friday, it goes ex-dividend, and it's going to pay sometime, I believe, in May. So $1.03, that's quite nice. Caterpillar had resistance at the 200 EMA. So that's a technical, it's a place where sellers are selling technically, and we got rejected at 38.2%. So we opened the day at the 38.2% Fibonacci, or we could say it's the inverse of that. It's really the 68.1 because it's moving back up. So it's retraced back to its high, 68.1%. 68.1. It's been a long week. Anyways, we had that important Fibonacci there. Disney up 4%. They announced yesterday that they've hit 50 million subscribers for Disney Plus. Home Depot up $7 today. I did buy another 100 shares at 201.85. It went as high today as 205.83 and closed the day right dead on at $202. So I now have, for Home Depot, I now have 900 shares. 700 are covered by short calls. 200 are growing out there on their own. AT&T up 3% today. Whirlpool, big 5.09%, moved above the 38.2% Fibonacci. So that's a pretty strong recovery. Whirlpool is a stock that you can buy more of now, and you'll be glad that you did. If we have a bit of a pullback next week below $100, make sure you look at some Whirlpool. Its dividend date should be coming up shortly as well. What else do we want to cover? The REITs here. AG&C had a big day today, up 9%, but still way off of its high. But their preferred shares, with the face value of $25 each, have come up really quite nicely. And any purchases that we made below $15 have just paid off. So that's it for today. We have nothing now until next Monday. The Fed is in charge. That means that risk is off. There's no risk to buying right now. There may be a pullback, but it won't be a big one. It may be now down to just a 38.2 if we do get a bit of a pullback. Coronavirus is still taking people's lives. People are not going back to work till at least May the 1st. It's been rumored. So rents are in default. Mortgages are in default. This is all going to catch up to us at some point. Just keep your eye on the moving averages. And you can see in this case here, the S&P, let's refresh our moving averages, rejection today at the 50. So a lot of technical selling going on today where you saw selling of a lot of stocks at either Fibonacci levels or daily moving averages.